Hey folks, welcome back to the challenge where I'm trying to make $10,000 in 1 year using $20,000 of capital, and I'm doing it all with Google options. So just a recap of what happened last week. On August 8th, on a Monday, I sold a call option and I sold a put option. And the idea is I want Google to finish that week somewhere within this range. And I had expected Google to fall during that week, but I guess I was wrong again, and Google continued to climb. So by the end of the week, which is right here, Google actually finished at 121.68. So that's just slightly above the strike price of my call. Now, what I did on that day, August 12th, because it was actually just like the last hour that Google climbed above my strike price. So, like 5 minutes before the market closed, I actually bought back my 121.5 call. And the reason I wanted to do that, even though I'm giving up $8, is because I didn't want to get rid of my stock and have my Google shares called away. And that's because if I don't have Google shares anymore, then I can't write more covered calls. So in terms of the transactions, I sold a Google call option for $57. I sold two Google puts, which expired worthless, of course. And then I bought back that call at the end of the week, the 121.5. So basically, these two cancel out, so I don't have the position anymore. And I made a profit because I sold it for 57 but bought it back at 8. So at the end of the week, I had a net premium of $74 US. And then when I convert that into Canadian dollars, that's $96 from weekly options from week 4. Because I closed my positions, I did not get my Google shares called away, so there was no stock transactions last week. However, because Google shares did go up from the previous week, that added like $400 to my total return because, of course, I still have the 100 shares of Google. So this is what the chart looks like after all of that. I made a little bit in option premium, so not much. However, my total return so far is 2,753. So let's take a look at what we can do this week. This is looking at tradingview.com. It looks like Google has come down a bit from Friday. Right now it is Monday, August 15th, 7:48. So the market's just opened about an hour ago. So it's down about 85 cents. Because it's going lower today, it doesn't look like it will go higher than that peak from last week. If I draw a channel here, like I've done before, we can see that Google is still continuing with this pattern of slightly going up, but it's still within this channel. So because it hasn't really broken out of this yet, like I don't see Google trading at 123, 124. Going by this pattern, every time it hits either the top or bottom of this, it just reverses course. There is a slight possibility that Google can surpass the top of this channel here and go higher. And if it does, it'll probably fill this gap over here, meaning instead of just going like up and then like this, it'll probably go straight up like that. Because when a stock gaps down like this before, it means there's not a lot of support there. So on the way back up, it means there's not going to be a lot of resistance. However, predicting short-term fluctuations is all about probability. So I think there's a chance that could happen, but it is a small chance. It looks like the price is starting to roll. You can see this is a curved shape instead of just a straight line. So what's more likely to happen is we're going to get a downward movement in the stock from here. So what I want to do is probably sell a call option very close to where the current stock is, 120.8 roughly. So maybe I'll sell one around 122, around here. And then on the downside, I'm going to sell a put option. That way I can take advantage of premiums on both sides, the put and the call. Now, in terms of how far the stock can fall, I can use previous price movement to determine what angle Google might fall at. That's kind of a steep angle, but it matches up with this one and it matches up with this one. So if we were to fall starting from today, that's kind of the angle I would expect Google to drop at. So if I take the last day of the week, which is the 19th, and I kind of line up my mouse on that day down here, and I go up, I'm basically looking at right around there. So that's like 113.5. So maybe I'll sell a put at 113 or 114 depending on the premiums. So similar to last week, I will sell one call and I will sell two puts. Now let's go into Interactive Brokers and pull up the option chain for Google here. Looking at the August 19th expiration date, I will start with the call here. So it looks like at 121, this is at the money basically, and I can make that premium there. If I go to 122, I can make a bit less premium, but it's still not bad. It's about $1. So I will sell that one, and let's try to choose the ask, sell that option, submit.
Order filled.
Okay, and that order filled right away, which is good. Now let's take a look at the put option side. If I go 114, that's a $9 premium, which is not too bad. It's only a negative 5% delta at 114, so that actually looks pretty good. I can even go 115 if I want to be a little bit more risky with my trade, but I think 114 is pretty good. So I'm going to click on that to sell this. And instead of one quantity, I'm going to choose two, and I'll go with the asking price of 10, and I'll wait a little while to see if it fills. Now, in order to make my target of $10,000 by the end of the year, you can see this yellow line. I have to basically increase my profits by $200 each week. But because I'm ahead right now, I feel like I don't have to take too much risk, which is why the options I'm going to make this week, once this fills, it'll be about $140 Canadian, something like that, instead of $200. And I'm okay with that because I don't want to be too greedy and try to speed up the process too much, because that can be risky. And like I shown in the first video of this series, you can easily lose $10,000 with a single options trade. Let's take a look at what the price is doing right now. So it's kind of down here near the lows of the day. I think if it drops back down to like 120.6, my option will get filled. If I zoom out here, we can see the daily chart. At least in the short term, it does look like Alphabet is overbought, because you can see all of these different moving averages here. The shortest one being this 10-day moving average, this green line, and we are definitely above that line right now. We're above all the lines. So there should be a pullback soon to come back down closer to those lines. And it looks like the price is starting to creep up now. Okay, so what I'll do is drop my price down to 9, which is the bid,
Order partially filled.
and now it's filled.
Order filled.
There we go. Okay. So I sold a call for 122 at $98, and then I sold two puts for $9. So $98 plus $9 plus $9 gives me 116. Going by today's exchange rate of 1.29, that'll give me about $150 in option premiums. So assuming I do not buy back my option like I did last week, I will have made a total of $1136. So I'll give another update next week to see what happens here. Either Alphabet is going to go really high and my 100 shares will be called away. If it goes to like $22.50 or $23, I might try to close my position again. However, like I mentioned, if Google decides to like do that, I mean, the most likely chance, if it does go higher, is probably around 128 or 129. And if it does go that high, then I'll just let it get called away. And that's fine, because I'm mainly doing this as an option strategy. I'm not trying to capture maximum capital gains here. So thanks for tuning in, and let's see what happens in the next update.